Well, I think it's very interesting that we've seen precious metals, gold in particular, push to new highs during a period of time where U.S. rates are rising and expected cuts are being priced out. That's typically not the way the relationship works because gold is non-interest bearing money, and typically when interest rates rise, gold falls because it doesn't bear any interest. I think the story there is much more about what's happening in the East rather than what's happening in the West, where downward pressure on the yuan in particular is creating domestic demand for gold. We're seeing significant demand sort of through proxy ways like domestic gold ETFs trading at 30% premiums, which is not a normal thing. The Shanghai premium, relatively elevated. All of those things are happening. And I think that's what's driving the gold price action. Because when you look in the West, actually, like GLD, which is a good indication of the GLD ETF, which is a good indication of retail and institutional demand for gold because of its easy, it's an efficient way to hold it. They're still selling shares. There's still a net negative flow into GLD at a time when the gold price is surging, and so it really is that story in the Far East and about the currency policy and pressures that exist in China, much more so than it is about what's going on with the Fed.
So if we look at the domestic positioning in the US in precious metals, how do you actually gauge the current positioning? Is it underweight precious metals given even with the price action that we've seen?
Yeah, I mean, if I think the sentiment, Western investor sentiment, I think is well tracked with that, with looking at the flows into and out of the GLD ETF. It obviously doesn't cover the whole market, and there's other things going on, the futures positioning and things like that. But it's become sort of a ubiquitous way in which basically everyone expresses a view on gold in the US. And so I think what we're seeing there, and we've seen 2 years of sales of gold positions in GLD as gold prices have risen, and I think that is setting up likely that's setting up a risk for a short squeeze. I mean, this is sort of a very classic way in which these sort of short squeeze dynamics emerge, which is you're underweight, you're selling, and then all of a sudden the price squeezes for some reason unrelated to the previous positioning, and then even moving from selling to neutral in terms of the flows could create a further exacerbation of the price pressures upwards. And so that's kind of the dynamic that I see emerging in the gold market, is that sort of Western short squeeze, demand driven by China creating a Western short squeeze, which is starting to put pressure on, further pressure on the price upward.